Okay.
Okay.
Yes. So you can hear me, but can you see me?
No.
Did you change the settings back to panelist on?
It did. I believe it did. Let's do that. Yeah.
Hmm. Is there an option to turn each person on individually?
Maybe another thing I remember. Maybe I should change you to be a panelist.
Oh. Yeah, maybe.
Uh, I remember the
I think that's what you did for the
yeah,
first webinar.
promote panelist. Okay, sorry.
Yeah, join as a okay. And then here's my video. Don't mind how I look. Sorry. Don't pay
It's
attention.
just like it's like we're going through this so we can figure out like how this works. So it's okay.
Right. Yes. Okay. So I guess when Keith logs on, you just add him as a panelist, and then
Mhm.
everybody else will be hidden.
Okay, sounds good. I mean,
That's perfect.
I think that's
And so I'll log back on at like 11:55 just to make sure there's no issues with anybody.
Mhm.
Right now I'm just making sure all of the lunch orders were being delivered.
Okay. So basically, you're going through that, and that's my second question. Like, if there's some people that registered and we just did not send them, or we did not have enough space for it. You know?
So, like I said, so yesterday I had the form shut down at 5 o'clock
Mhm.
because I was flagged on Uber for placing too many orders. And
Mhm.
so I didn't want to have orders overnight and then have to place them this morning and then have an issue with having them delivered and then not having people have
Okay, but
lunch.
but but my question to you is like, did we have more people registered or no?
No, what
Or
I sent you this morning was the final list of 30 something people.
okay, yeah,
So
because
I
like
think
there's
it's
some people that
31.
yeah, because yesterday I called some people and I was thinking like they're gonna come in onto like they had some like accounting office that they're gonna but I don't see their names. That's why I kind of like, did we just cancel or we were not able to get them
No,
registered?
they didn't come through on the form. I had one overnight
Mhm.
from they were from I don't know what business they were from. Oh, Elizabeth Rainbow's Kid Academy is the one that came through overnight.
Okay,
So that's the only other one.
okay,
But
so
what we could do is if this one is this one goes well, we could do it again and then open like say we could say, hey, you missed your opportunity for this one. Here's another date, and then
yeah, I mean, we can. I mean, I'm at this point. I just want to make sure that I mean, it's great if we have 30, you delivering 30 meals. We're good.
right.
Everything looks good. So let's.
So far, so good.
Yeah.
Nobody's messaged about not receiving their lunch. We had one person um
Hmm.
say have to change their address, and that was it. Hold on, they're messaging
Okay,
me.
sounds good.
Okay, so I'll
So
log on at
I'll let
55.
you to it, I guess.
Okay. All right. Bye.
Bye. You didn't hear about it. This is something that you should know about. It's like there is state mandate. Basically requiring everybody to have a retirement plan. That retirement plan or facilitate a retirement plan. Uh, in Illinois, it's already for if you have 5 employees or more, you need to have in your payroll unit. What's exciting to me, it's tax credit, and you're getting to establish it. Basically, it's just there is a penalty. You know, you for not having a retirement plan. Second, there is a penalty for not having a retirement plan or facilitating retirement for the employees. Second, there is a tax credit uh, for establishing the retirement plan. So just to explain and walk you through that part, and also, that how we can actually scale, make sure it's easy, seamless to build these plans and have their own, financial freedom. So Illinois secure choice. Basically, this is a state mandate. Uh, if you have 5 employees or more, you have to have a retirement plan or facilitate retirement plan for them. If you don't, there is $500, 215 first year, $500 each like penalty. So I know it's send this information for everybody to see, and series like the Illinois Revenue Bulletin explaining how that works and what's the minimum requirement for it. So this is the first thing that we want to share with everybody on the call. The second thing that we want to share with everyone is, which is more exciting, I think, is tax credit. Here, what's the opportunity? Basically, if you have less than 100 employees, there is tax credit. It's actually built into starting a 401k plan. Setting up the plan, or if you have added auto enrollment for the next 3 years. So what that means that it's actually you'll be able to offset the cost for establishing the plan to $5,000 plus $500 of auto enrollment. So that's the other part is for matching. It's 100% of the contribution, half of each qualified employee, and for the second year, then it starts to go down. But that's amazing, actually. That's amazing opportunity for everyone to understand. So I will jump to the example where we say, like, if you have 40 employees and you establish a 401k plan, tax credit is $5,000 to establish that plan. There is like another $500 for the auto enrollment. Then depends on the match that you do for your employees. There is like, if you have 40 employees, give them each one $1,000 every year. That's $45,000, 500 for 40 employees. Tax credit. It's not deduction, that's tax credit that you get as an employer for having this for establishing a plan. Next, after 2 years, it goes down by 75, 35,000, 20,000, 10. So around let me calculate that. Hello?
Hello, Assalamu alaikum, Hussam. I'm so sorry for bothering you again. Some question for you. What happened to our health insurance? This is the same, or they gonna give us a new card?
It's the same. It's the same. There is no change. We did not make any changes on the plan.
Why? Yeah, why I'm asking interruption? We made an appointment for Jawad to doctor because his doctor, Dr. Golbin, he retired. So we had to do like a new patient. And they asked us to provide picture of our health insurance. So because each of us has our own card, United is different compared to Blue Cross Blue Shield. I made a picture and sent it to them. They was looking for Jawad and they mentioned they can't find him on file.
Okay.
For this insurance. If you can please check.
I will,
because
I will check it. Victoria, I just have like right now, like a call, like a presentation. As soon as I finish, probably like another hour. Once I finish,
fine.
I will.
Jawad has an appointment in May.
Oh,
so
okay. So it's
we
not
still
the.
have time,
Okay.
but we need
No,
to
I will.
know what's going on.
No, I think we did not make any changes on the plan. I'll double check if there is anything that we need to do, and I will let you know what's the issue.
It's good.
Okay, I will.
Wait for it.
No problem.
Hussam.
No problem. No problem.
Thank you. Bye-bye.
Look, for 5 years, basically. Each employer is different. Hello, Keith.
Hi, what's going on?
I just want to make sure that you are able to log in.
Yes, well, I didn't try yet. I was just gonna grab a cup of coffee and I'll log in 2 minutes.
Okay, perfect.
I'll see you then. Thanks.
Thank you for the Arab American Business Association for hosting this event with the SPDC office, Palace. Today we're going to talk to you about the state mandate, Illinois state mandate choice, secure choice, which is a state mandate, and the tax credit. Then we're going to talk to you, we're going to explain to you how to basically set up a 401k, the ideal scenario, and most seamless way to do it. ماشي. بعدين Hello, Keith. You're muted.
Hello?
Hello, Shins. How are you?
I'm good. How are you?
Doing good, doing good.
That's good.
Yeah, I think I'm in.
Hi, Keith. How are you?
Good, I got in finally.
That's okay. Just like we're waiting for people to trickle in.
Okay.
I guess many people registered under Christina link, so they're showing as Christina, so it's okay.
Will we see the other people, Hussam, or is it just you that's on the screen?
It's supposed to be me and you, but I think we can see other people. But it's I think when they registered using Christina link, it shows as them, so that's okay.
Okay. I mean, can you see me right now? My camera doesn't even appear to be on.
I cannot see you.
Yeah. It doesn't give me the ability to show my camera.
I'm gonna, because I promote you as panelist, if you can.
Okay, join as panelists.
Yeah.
Hello, everybody. How are you guys doing? How are you, Hussam?
How are you? How are you? Rami, thank you
Nice to see you
for
here.
yeah.
I am definitely not Christina, so
No, I think it's just like when we, it seems like when they registered, it's just went as a Christina, so it's fine.
yeah.
We're
I see
showing everybody
Tawfiq
as
here. How are
Christina.
you, Tawfiq?
So it's fine.
Hi, I'm good. Nice to meet you.
Good to see you again, Tawfiq.
Nice to see you guys. We'll give it like another 2 minutes before we start, just so we can have a better, give people the chance to log in.
We want to thank you for the lunch, Hussam. It was really nice. Thank you.
Appreciate it. Thank you for. I'm glad that you received it. So that's. I hope everybody received it. Okay. I mean, I mean, we'll give it like a couple of minutes. Or slowly but surely, more people are trickling in. So I want to start by saying thank you for everybody that was able to join us today. Thank you for the Arab American Business and Professional Association for hosting the event, and for the SBDC, especially for Rami to facilitate this interaction today. Introducing myself, I am Hussam Zayyad. I am the president and financial planner for the Takaful Wealth Management. And today, the reason for the meeting, or the main objective, is to educate everybody in regard to Illinois Secure Choice and the tax credit that's available for everyone to establish their retirement plan. And hopefully we'll get Keith to explain the ideal way, actually, as in my opinion, to establish a 401k plan or to manage a 401k plan. With that being said, today, right now, as of today, the rule is there is like something called Illinois Secure Choice, and which means that everybody that employ 5 employees or more in Illinois, they have to facilitate a retirement plan for their employees. If they don't, there is a state mandate where they will be actually required to pay a penalty of $250 per employee, but right now it's actually $500 per employee because this is the second year. So it's $500 per employee if you don't have a retirement plan for your employee, or you don't facilitate one. So that's not that's a problem, I think, for most people that's have more than 5 employees. But the advantage is we have something in the same, the government basically gave us a different way to basically establish the retirement plans and subsidize it. So they didn't just do the penalty, they actually gave us credit to establish retirement plans. So I want to make sure that everybody understand the credit that's available for having a retirement plan for the employees. So as the opportunity is, if you start a plan for the next 3 years, you will be able to get the cost been paid by the federal, basically by the IRS. So at the end of the year, they will look how much is the cost of the plan based on how many employees you have. They will credit you up to $5,000 for establishing the plan. The second part, if you do online, basically auto enrollment, you get another $500 of credit just by changing the plan to have online or automatic enrollment. I wanted to make sure, I know this is like, I want to make sure that if we can, later on, we'll have more interaction on regard to this, but each individual company is different. It depends on how many employees the company have. But I wanted to give everybody like an example of somebody like a company that have 40 employees. Basically, what happens is they get $5,000 credit to establish the plan, plus $500 for automatic enrollment. And for the contribution that the company pay for the employees, per each employee, they get $1,000 of credit. So in our example, we say, like let's say a restaurant that have 40 employees, if they establish a retirement plan for the company, the setup cost will be basically subsidized, which is up to 5,000, plus there is $500 tax credit. And for each employee, if they give them match or they give them like to give them like $1,000 per employee, so you're talking about like 45,500 for the first year. The second year, that number, for the first 2 years actually, then it goes down at the years after. But for the first 3 years, basically, you're getting heavily subsidized payment from the government to establish the plan and the credit that you actually can choose to give your employees. So, so for employer that have 50 employees or more, actually anybody who have less than 100 employees, this is a no-brainer right now to establish a retirement plan for your employees. You're leaving money on the table by not having a retirement plan. I know I'm going fast on this part, but I want to make sure that I introduce Keith, and he will walk you through the plans that we actually propose for most of our clients when they want to establish a retirement plan. Keith, can you basically take over?
I certainly can, Hussam. Thank you. And thank you everybody for joining us today. I'm glad you guys could find the time and carve out some time. And I think we all owe Hussam a big thank you for bringing us together. And I think if you kind of go into this today with the idea of this whole concept of a pooled employer plan, a PEP, is relatively new. And by the time we leave here today, I'm hoping you'll have a better understanding of what it really is and why the government set it up. And with that in mind, we don't have a retirement plan problem in America. We have a retirement plan coverage problem, meaning that 65% of all employees have access to a 401k at work. 35% don't. And typically the 35% that don't tend to be smaller employers. You folks living in Illinois, your state is now mandating that you have to offer your people a plan. And if you don't, you have to pay a penalty. And for once, I'd like to think that our government actually did something right and did something really cool. And that is creating this pooled employer plan. The purpose of the PEP is to remove the responsibility from the employer and transfer that responsibility over to the PEP. That is the main game changer that this program brings to the table for you as a business owner. With a traditional 401k plan today, like a standalone plan, the employer is referred to as the plan sponsor. And the plan sponsor wears a hat that has many responsibilities. If I can keep this at 30,000 feet, which is my idea, I promise I won't go down too many rabbit holes. Not yet, not till you guys ask questions. You get to shed that plan sponsor hat and kind of throw it in the garbage. Transfer all that responsibility to the PEP, who then wears the hat of plan sponsor and everything else, which I'll get to in a second. And yet at the same time, you're allowed to offer your employees a plan. And then you couple that with what Hussam was sharing before, they're giving you an incentive to actually help you pay for the plan with these tax credits for the first 3 years. And the tax credit thing, I want to shed some light on that too. It's not a deduction. It's not like a business expense. It is legitimately a dollar for dollar tax credit. So at the end of the year, if your tax bill was 100,000, they're just going to ask for 95,000. They're giving that tax credit back to you. So they're trying to encourage businesses. Now, we talk about a standalone plan and those responsibilities. What are the responsibilities of a plan sponsor? Well, as the sponsor, you are to monitor the record keeper, monitor the third-party administrator, monitor the advisor, monitor the investments. Make sure you do an investment review every year. If you have investments that aren't doing what they should be doing, replace those investment options with a different investment option. Some of the day-to-day administrative duties that you have as the plan sponsor are you're supposed to track and monitor employees' eligibility. So when newly hired employees become eligible, you as the employer, as the plan sponsor, you have to notify them. You have to get them signed up in the plan. If a participant takes out a loan, or there's a termination of employment and they leave, you as the plan sponsor have to sign off on that so the record keeper can release their money. At the end of the year, there are a number of required notices and disclosures that are supposed to go to the participants in a 401k plan. And the record keeper gives those notices and disclosures to you and says, here you go, disseminate these to your employees. When you stop and think about it, a plan sponsor spends a lot of time running a 401k plan, which is supposed to be an employee benefit, but ends up being a big time commitment for this employer that doesn't add anything to their bottom line. It's nothing, it doesn't help them make money in the line of business that they're in. So along comes this concept about 4 years ago called the pooled employer plan, and designed to allow an employer to join this pooled plan. Look at it this way. When you join the PEP, you get to keep all of the fun stuff. The fun stuff being plan design. So who's eligible? Is it age 21? Is it age 18? How long do I want my people to be employed before I allow them to get into the plan? Is it 1 year? Is it 3 months? Is it 6 months? Am I going to make loans available? Am I going to do an employer match? What's that match going to look like? So that whole plan design part, which I call the fun stuff, you still retain all of that. The fun stuff where you cannot get in any trouble. At the same time, you offload the responsibilities where you can get in trouble. And that would be things like eligibility, things like signing off on distributions, the review of the plan, all those things I cited before. So the whole concept is designed to make it as easy as possible for you as the employer, okay? And I want to stress this for a second. This is really an employer spiff or benefit. Because now if I change and look at it through the lens or through the eye of the employee, it's still just a 401k plan and nothing really changes. So I have access to this plan at my employer. I contribute to the plan. My employer might make a contribution. For me, it's sort of the same if it's a standalone plan or if it's part of a pooled employer plan. But for the employer, it's a huge game changer. As far as the employee is concerned, one of the things that they do and would benefit from, I want to point this out, is that because this pooled employer plan will have thousands of employers across the country participating in it and hundreds of thousands of employees, they have access to a much lower cost investment lineup. And so that would be a very big advantage to the employee. Sorry, Hussam, for jumping all over the place.
No problem. I'm just like trying to get the actual corresponding slide to
If
it.
you want to go to page 3, I think that would be a really good one for me to kind of go back and summarize. So here is kind of like an overview of the pooled employer plan itself. Now, this particular PEP, this pooled employer plan, is sponsored by Mass Mutual. In order to participate in this PEP, you have to be introduced to it by a Mass Mutual advisor, which is Hussam. It is exclusive to Mass Mutual. When I talked earlier about the role of plan sponsor, and this is a very differentiating comment for this Mass Mutual, this RMS Easy Plan PEP. It is one of the few out there that actually has a named fiduciary. In other words, think of the plan sponsor in a company called Access Retirement Solutions. They wear that hat that the employer, as the plan sponsor, wears on a standalone plan. You, as an employer joining that PEP, you take that hat off and you get rid of it, and you pass all that responsibility over to Access Retirement. As the plan sponsor of the PEP, they oversee everything. So the three main players in this 401k plan within the PEP, now I'm going to back up a half a step. It's still just a 401k, all right? It has all the benefits and all the features of a standalone plan, except for you as the employer, you get to shed a lot of that responsibility. And that's the game changer for you. So part of it, who are the three main players within the PEP? Mass Mutual, they are the investment fiduciary. As such, they are responsible for selecting the investments that go in the plan, monitoring that investment lineup, making changes to that investment lineup whenever they see fit, and making sure that they bring to the table a good lineup of low-cost mutual funds for all of the plan participants to pick from. One of the really important things that I noticed right out of the gate with the Mass Mutual plan, there are no Mass Mutual investment options in this PEP. And so if you have never heard of a PEP, don't feel bad. That's what today's conversation is all about, to introduce you to it. If you have heard of it and if you've looked at any, I would encourage you to look at the investment lineup to see if the sponsors of the PEP are using it as another way to have you use their stuff, their mutual funds. And if it does, there's some fine print in that contract that really doesn't alleviate you from being the plan sponsor. With this PEP, the RMS Easy Plan PEP, you are relieved of all plan sponsor responsibilities because that is given to Access Retirement. So the other one is Alaris, and we are the record keeper, we are the trustee, we are the administrator. We do these things called 316 administrative services. This is the day-to-day stuff that usually the plan sponsor, the employer, is responsible for. And I kind of alluded to it earlier. It's the eligibility tracking, the monitoring. So when someone becomes newly eligible, it is Alaris's responsibility to contact that employee and say, hey, coming up on July 1st, you will be eligible to enter the plan, and to make sure that they are aware of that. And if there's ever a distribution or somebody terminates, we sign off on that. And then we, at the end of the year, we issue all the required notices and disclosures to your employees so you don't have to. So again, it's a way for you to offer a benefit that isn't a time commitment and is buttoned up, and all of the duties of that plan, of running a retirement plan, are passed off to the professionals behind it. And last, and obviously most important, is Hussam and his folks. And Takaful will come in and they will help explain the 401k plan to your employees. When they have questions about what's going on, or what about this, or what about that, Hussam is the quarterback. He is a part of that plan, and he is just as important as everybody else. But again, it's designed to take the day-to-day responsibilities of offering a 401k off of your plate as the plan sponsor and putting them over to the PEP itself. And the whole concept of the PEP designed to help encourage employers to offer a plan.
Thank you, Keith. I just want to make sure that I explain, go back to the basics, why we need to make sure that we have a retirement plan as of today. So if we go to basically in Illinois today, we have responsibility to offer a retirement plan to our employees. If we have more than 5 employees, we have to offer a retirement plan. So this is become like a state mandate. And if we don't, we receive like $500 per employee for not offering a retirement plan. So when we come back, when I sit down with clients, small business owners, start talking about fiduciary responsibility, lineup, 5,500, all this, things that's basically never, most of the employers never, if they never sponsor the plan, they don't know about it. So it's kind of like becoming complicated issue. People say, you know what, we'll just pay the penalty. And just, we'll live with it. I have 5 employees, that's going to cost me 2,500. It's an extra tax, and I'm okay with that. Or I have, 10 employees, it's not, it's a tax, extra tax. So we're coming back to the government came up with another way to help us to do this, saying, okay, we actually gonna help you pay the cost to set up those plans. So that's actual credit. And if you actually provide employees benefit, meaning you are actually matching their contribution or giving them, let's say, a profit into their retirement plans, and setting aside $1,000 per employee. So that's not a small number. $1,000, if you give each employee $1,000, let's say you have 10 employees, you give them $1,000 extra, and instead of giving to them cash, you put it in their retirement plan, you're actually getting a credit for $1,000. So you're actually providing your employee $1,000 per employee per year for free. You're leaving this on the table. Basically, I see a lot of my clients that, they either because it takes time to establish or explain these plans. They say, it's taking too much, or I don't want to go through setting up my own plan and have a TPA and have my accounting integration and all this problems that comes in. So Mass Mutual with Keith, and we came up with this strategy. We're saying, okay, with the new rule, basically there is multi-employer plans or PEP. And with that, we actually can go and have a streamlined process, simple, very low cost. You probably, if you are in your own to get the same cost to establish the plan, you need like $10 million or more. For these plans is actually the cost is super minimal when it comes to setting up the plan, and they integrate with your payroll. So from your side as an employer, you just participant on the plan. It's an easy, I would say like the easiest way to actually set up a retirement plan for your employees, and getting, give them something that's actually become more competitive. They have the feel that they have when you talk to employees and say like, we have a 401k plan, we can design it where we say like, there is this match is vested, meaning you don't get this money until you stay with us for 3 years. We can actually create all the fun part that a big employer will be able to establish on a smaller scale. And that's why we wanted to make sure that, I wanted to make sure that small business that have less than 100 employees, this is something that's we've never been that excited actually about something like this. We never had this opportunity before, and I think everybody should participate on their own capacity to establish a plan like this. I think paying the penalty is the worst scenario. I would say like there is no reason for anybody to pay the penalty. There is no excuse. Right now, you know about the penalty, you know how it works. I hope that nobody actually end up paying the penalty. Establish a retirement plan. Basically the government is coming in and saying we will give you a credit for it, and that's how it's how the setup. If you have 50 employees, that's a $50,000 a year of extra money that you're leaving on the table. So I'm just, I'm trying to give that concept in people's minds to say, that's an advantage that we had through Secure Act 2. Not many people talk about it because there is other things that were happening at the time, but this is an excellent program that we have from the government. It's guaranteed for the next at least 3 years, and I don't think that's actually ever going to change once we start, once started. And we hope that everybody participate. With that being said, Keith,
No, that's an excellent point. And if I can go back and just give you a little part of the history, just kind of shed some light on this. I've been at Alaris for over 33 years. When I started in this business, there was no voicemail. There was no cell phone. There was no internet. People used to staple a check to a piece of paper and mail it to us. That's how long ago it was. And the industry has obviously evolved over the years, and we've gotten better and better. And now, we take care of the employees, we take care of the participants. And that's been something that's been very, very high level for the last 20 years. But now it's focused on the employer. And it's about time we take care of the employer and make it easier. For those of you who deal with the government in any other part of your business job, it just gets worse every year. There's more and more red tape, there's more bureaucracy, and the genie's not going back in the bottle. So this is designed to make it easier and simpler for you. And I think this will shed light too. So in the past, there's always been this thing called a multiple employer plan. Today, what we're talking about is a pooled employer plan. And real quickly, one subtle little difference. Think of a multiple employer plan like the Chamber of Commerce where you live, or like if you're part of a dental association or an accounting association. The association sponsors a retirement plan. But these things used to have what they call the bad apple rule. And any employer who was part of this multiple employer plan, if they did something wrong as plan sponsor, the whole MEP could be disqualified. And you're probably thinking, okay, well, what does that even matter? Well, if you're an older participant like me, and you have a large account balance, if the plan is disqualified, you get a check and a 1099. Well, wait a minute, Keith, can't I just roll it into an IRA? No, because it's no longer qualified money. It's no longer a 401k, and you just have to pay tax. So the landslide legislative change was to get rid of the bad apple rule. Now you can participate in this RMS Easy Plan PEP, literally with thousands and thousands of businesses all across the country. I hesitate to say one of them will screw up because they're not doing anything. The PEP is monitoring and managing itself. But if they were, you have nothing to worry about. Your plan is still fine. Your money's safe. And that's why PEPs are new. And that might be a reason why you haven't heard of it yet. But now that you're being introduced to it, definitely consider it strongly. One of our leading ERISA attorneys, Employee Retirement Income Security Act, federal laws protecting participants in a retirement plan. He said that if we had started 40, 50 years ago when 401ks first came out back in the early 80s, if we started with a PEP, there would be no standalone single employer plan today. And he predicts within 5 years, half of all the plans out there will be in a PEP. I agree, because it is such a game changer designed to take care of the employer. Now, I have been rattling on why it's so cool for the employer. Hussam, if you can go to page 6 of that PowerPoint, there's one important part of the, there you go, boom. So this is sort of like at a glance of what I said earlier, with your standalone traditional plan on the left and all those responsibilities and duties that you have as the plan sponsor. You as the employer are responsible, and you get some support from a third party, the third party administrator, the record keeper, the advisor. But at the end of the day, you are the fiduciary, and you are responsible for everything that goes on with that plan. Now, with the pooled employer plan, you can see that all of these areas have been, all those duties have been relegated to somebody else. to the plan sponsor of the PEP, to the administrator of the PEP, the investments to Mass Mutual, the day-to-day stuff to Alaris. But if you look at the bottom, there's one thing that we do, and it's a non-negotiable. We do need you as the employer to get us the money and get us the participant data. And participant data is really like a census, right? So it shows the employee's name, it shows their hire date, because we need that so we can track the eligibility. If somebody were to terminate it, it has a termination date. So if they call us and say, hey, I no longer work with XYZ employer, I want to move my money to my new employer's 401k plan, we can see that that person is officially terminated. And so how this works is, again, I started earlier by mentioning a check stapled to a piece of paper. Today, everything is done on computer, and payroll is done on computer, and payroll providers have integration with record keepers like Alaris, where we can get all of this data from them every time you run payroll. And so when we set it up front, yes, there is some work involved, designing the plan, getting the payroll function and the payroll integration buttoned up. But once we get there, the plan really just runs on its own. And then when it comes time for year end, if you don't have a plan today, you're not aware of this, but at year end with your standalone plan, the administrator always asks for a census. We need a copy of your last year's census so we can do all the testing. Well, Alaris, as the administrator for the PEP, we're not going to bug you for a census. Your last payroll at the end of the year is your year-end census. So you get to offload everything except for you do got to help us get set up with getting the money and getting the data. And getting the money, it's as easy as having a bank account set up so that when payroll is run and we get the data from the payroll provider, a couple days later, we just go out and do an ACH debit and get the money right from your bank account. So once established, it will run like clockwork. One more thing, if I may. Hussam, you mentioned before about the match, the employer contribution. One of the things that you'll want to also discuss with Hussam, because of that credit for making an employer contribution, is something called a safe harbor match, a safe harbor contribution. And safe harbor today has become the new gold standard when it comes to an employer's 401k benefit. It is a terrific tool for you as the employer to attract new employees, and an even better tool to retain your quality people. And since the government is there to help you out, help you offset some of the cost of an employer match, it would definitely be the way to go. I'm not going to go down this rabbit hole, but in addition to the safe harbor, the other benefit you receive is any of your key people, your highly compensated employees, or you as the owner, you're allowed to defer up to the $23,500 this year, no questions asked. And safe harbor is probably the only way you can maximize that deferral amount. But we can talk about that later on with you, with Hassan, or bring me back in if you want to get together individually and talk about that more specific to you and your situation.
The good part about the plan that we designed, basically Alaris and Mass Mutual design, is you're able to have it as a regular 401k or Roth 401k. You can actually create the design. So that discussion, I know it's today is like we have like over 20 participants. So the discussion is something that we can come back to individually and say, okay, based on what you're looking for and how you want to design your plan, we can actually design it and customize it. But cost-wise, you're basically coming in a pooled employer plan. We're talking about maximum cost of 26 basis point, which is like less than 0.25%. If you go to the same mutual funds to do it under your IRA account, probably is going to be like 1%. So that's a big, significant saving comes to it. Second is the credit, how much credit I can get, and that part, I mean, employees matching. This is always a business decision that people have to make, and this is individual by individual. we're saying if you have 50 employees, you're leaving $50,000 on the table by not actually doing anything for them. And that's that's a significant number. I would just calculated on the like 40 employees. We're talking about like $105,000 of money of funds, that credit that you actually should be able to get in the next 3 years. By not doing this, you're leaving a lot of money on the table, where you can actually use it to attract employees, use it to keep employees, and that employee, that include you as the employee if you are not, or your family member if they're not making over 100,000. So that's the highly compensated question is important, but most people who are actually in payroll or their spouse on the payroll, that's extra funds that you actually can add to your retirement plan, where you shouldn't leave it behind. And I want to make sure that we leave like another 5 minutes or so for anybody who want to ask any questions or comments on regard to the presentation. And just a reminder, we will send you the material that we had and the Illinois, basically the revenue rules that you actually, you need to register. There is a process if you actually don't have a retirement plan in place. And even if you have a retirement plan in place, they actually want you to disclose it to them again. So the penalty, they're starting with the penalty is going if you don't notice it. The problem, what I say to so many clients of mine, that they don't see it because maybe they are not the one that doing the payroll, or they don't notice it because it's like I have 10 employees over the year. It's they don't see that big number. So, but it's a $5,000 if you have 10 employees. That's not small number. There is no reason for you to actually get penalized from Illinois state for the state revenue. With that, anybody who have any questions, please feel free to unmute and ask.
I have a question, please. Thank you for your time, Sam and Keith and SBDC, for arranging this. The question I have is in terms of, like, is there a threshold in terms of the credit? Because like below 50 employees regularly, it should be fine. If we go above 50 employees, how does that impact?
There is a calculation to it. It's 2% decrease. So it's a phase out calculation for that.
Gotcha.
So if I have like 60 employees, it's different than if I have 100, and the match start to change. But it's if you have the easy math, it's like if I have 50 employees, if I have more than that start changing. If I have over 100, I have another problem that PEP solve for us is you don't have to have an audit. Which is like if you ever have an audit in your 401k plan, that's a $10,000 bill. With with the pooled employer plan, it's not your problem. It's the plan is actually, we are the one that actually taking over that issue.
Got it.
Sorry.
Thank you.
The cash, sorry, I see like somebody in the chat asking about the cash balance plans. The cash balance plan, it's a separate, that's a separate discussion. But yes, we handle it in a different setup. So we can help you with cash balance plan or defined benefit plan if you're looking for that, instead of defined contribution.
Can I touch on that a little bit, Hussam? The
Go
cash
ahead.
balance?
Go ahead, Keith.
That's a great question. And the answer is yes, because without going too deep, you do use the cash balance and the 401k / profit sharing plan together. And you're making some contributions to the 401k plan, a profit sharing contribution. And Alaris we are part of the PEP, and you can use the PEP as your 401k profit sharing plan. And then you can pair it with a cash balance plan. So you can have both. The cash balance is not part of the PEP. It's a totally different defined benefit plan, as you know, but they can be used together at Alaris. So you can benefit from the PEP and still offer a cash balance. Yes.
Just for
Uh,
everybody to understand that the cash balance, usually it's a higher limits of how much you actually can defer in retirement. So some people who are like dental practices or like where it is fewer employees, and that's a design question that definitely would require a separate conversation than what we have today.
Great presentation, Hussam. May I ask a question about like there's a lot of businesses who have less than 5 employees. Will they still be eligible for any benefits if they enroll?
They will be able to enroll in the PEP. So basically, if they want to establish a retirement plan, I would argue this is probably the easiest way to set up a plan for somebody that's instead of themselves have the responsibility to build it, Rami. There is no penalties from Illinois Secure Act. So they just want to make sure that the Secure Act is if you have 5 people in your on your payroll. Basically, that's how they're tracking this. Once you have 5 people or more, then there is a penalty if you don't have registration.
Yeah, my question again, another question is if I have less than 5 employees, let's say I am a one-man show or 2 people or 3 people, and I want to enroll, will I be eligible for benefits on tax deduction?
Yes.
Yes. The answer is yes. Yeah, small employers can take advantage of this as well. Yes. And then that's totally different than what Hussam was answering with regard to the state of Illinois. They're not going to penalize you for not having a plan if you have 5 employees or less. But the answer is yes, you can do it. And I would piggyback on that and say this. Does it make sense for a company with 3 or 4 or 5 employees to offer this plan? Yes, if the owner is going to take advantage of it, or if some of the other employees are going to take advantage of it, and they're going to put a bunch of money away. If they're only going to put away $5,000 or $6,000 or $7,000 a year, just do an IRA. If you're going to do, 10,000, maybe. If you're going to do 20,000, yeah, then the PEP makes a ton of sense. And again, you're offering that benefit, and you're not responsible for all the day-to-day monitoring and running of the plan. But the way, in my mind, to justify that, I would want to be putting a bunch of money away to make it worth my time.
So I do understand that like the maximum annual limit is $7,000, but if I go with the PIP, do you mean that can be increased?
That's
Yeah, for an IRA, it's 7,000, but for a 401k, it's 23,500.
Mm.
So really, the 23,500 is kind of like a very big IRA, and that's the
Mm.
benefit of a 401k plan.
So basically, we can advise those small business owners who are just starting and they have a new business and they have 2 or 3 employees to go with the 401k so they can personally benefit as well, correct?
Yes, if they want to personally benefit, right? If they want to put a bunch of money away, it makes sense. But would you spend 3 or 4 grand a year for administration and cost of a plan if you're only going to put $5,000 away? I would argue no. I would argue then if you're not going to take the full advantage of the 23,000 or come close to it, you're probably better off just doing an IRA. But if you do want to take advantage and put as much money away as you can, which is 23,500 of your own money, if you're over 50, you can put another 7,500 away. So now you're at 31,000. Is it worth your time now? Heck yeah. And you can
Will
do
be, sorry, go ahead.
And you can do an employer contribution on top of that. I mean, the most you can put in a retirement plan for any one person any year is 70 grand. And if
And
you
the
still
employer
have more money, then you
contribution,
do a cash balance on top of that.
and the employer contribution will be credited from the government in that case, as you explained before.
The matching contribution, yes. What Hussam was talking about before, yes.
Yeah. Oh, great.
Yeah. But it really comes down to, are you getting your bang for the buck? Is it worth your time? And my point was if no one was interested in deferring a lot of money, then why mess around with it? But if they do have the budget and they do want to put a bunch of money away, it's a perfect tool. And yes, to your point, which is a great question, They don't have to offer a plan, but they certainly can. And this would be a very easy one for them to put in place.
There is a question in regard to basically Islamic guidance in regard to the retirement plan. This plan, the pooled employer plan, it's a turnkey plan. It's a setup exactly the way that they, like there is no flexibility in regard to changing the lineup. If somebody wants more specific funds to be in the lineup, that's where we have a different conversation in regard. Okay, this is a different setup that we can set up for the plan. And for us, it depends on. That's why I want to make sure that each individual employer we reach out, make sure that you tell us like what's your guideline, what you're looking for exactly from the retirement plans, and what's the best setup for that scenarios. But I want to make sure that yes, for this type of this plan is a turnkey, low cost, the simplest plan that I can tell anybody, like from how much back and forth from your side that you have to do. The only thing that we actually engage the client really heavily is the plan design, meaning how much I want to defer for my employees, what's the vesting schedule look like? Do I want to do a profit sharing? Do I want to give them option to have a loan on the plan? The administrative sides is just the setup. I can tell you, like I have probably like quite few plans right now that's with Alaris since we launched this easy plan, and the easiest way to start a plan. And actually, I would argue the easiest way to run a plan, because like we have employers that have 70 or 80 employees. It's very simple for them to explain to all the employees what's the lineup, how this works. And we, from our side, I have basically another financial advisor that work with me just to make sure we are actually taking care of like the employee one-on-one. So we make sure that everybody have a chance to talk to an advisor in regard to their financial plan. So if they want something other than the retirement questions, they have outside funds, they want to roll it in. If they have like life insurance or anything like that they need question in regard, we will be able to help them with estate planning and in that side of the business. So you're not alone. You're not setting up the plan and you actually need to explain it to the employees. We make sure that we actually come in and provide that extra service. Oh,
yeah, one more thing to add to that, if I can. So that there's a famous old saying, right? You don't know what you don't know. And when I talk about all these responsibilities that you would have as a plan sponsor, and if you've never had a plan, you don't know. I could give you a little bit of a blanket number. The typical plan sponsor probably spends 30 to 40 hours a year dealing with the retirement plan, because they need to fulfill those responsibilities as plan sponsor. And therein lies the beauty of the PEP. You get to save a lot of your time, and yet you are still providing that employee benefit called 401k. And that's why they feel like so many plans will join the PEP. And I don't want to bore you with this comment, but it's been 4 years since the government changed the legislation. And speaking of, you don't know what you don't know, when the PEP concept came out and they got rid of that bad apple rule, it was kind of like now what? Right? And everybody kind of sat around and kind of tried to figure it out, like, who does this benefit? Does this benefit the small employer? Does this benefit the large employer who would otherwise have to have an audit? And everybody kind of tried to figure it out. That took a few years. But then a few years ago, the industry kind of had an aha moment and the light bulb went on. And everybody's like, wow, these are pretty cool. And they really are a benefit for the employer to offer that benefit to the employee without the time commitment, without the extra hassles and headaches of running it. You save the audit cost, which Hussam referenced before, because you're not getting audited if you have more than 100 people. There's a lot of things you don't have to do to the tune of like 30 to 40 hours a year. And then the question is, what is your time worth? right? 30 to 40 hours is a lot. And you could be spending that time contributing that toward running your business and let the easy plan PEP run your 401k.
There is a question in the chat in regard to, can you get in, like if you decide that you want to change or get out of the plan, how the process looked?
Yes, yes, you could, of course. You would just, how do I say this? If you, I'm going to get technical here. Here's the rabbit hole. I thought I could go a whole hour without going down the rabbit hole, but I can't. If you have a standalone plan today and you join the PEP, in a sense, you are terminating your individual standalone plan, and then you are merging it into the PEP, into a group plan, if you will. If for some reason down the road you decided that the PEP wasn't for you and you wanted to get out, you would terminate your relationship within the PEP and take your little individual plan from within the pooled plan and spin that back out of the PEP into a standalone plan. Yes. Yes, you can.
What's that? Sorry, I'm, because like everybody is showing as Christina, so it's if you can unmute and ask a question.
Oh, I think I see it. More concerned about deconversion fees. So here's what's cool about the PEP, and here's what's really interesting about Alaris. Most of our industry, in fact, almost all of the other providers out there do charge some sort of an installation or setup fee. Alaris with the PEP does not. There is no cost to get in. There is a $1,500 deconversion fee if at some point you decided to leave. And the reason we have that is there's just as much work on the back end getting this plan out of the PEP and over to wherever it's supposed to go. And so rather than charging a higher fee each year while you're in the PEP, we've made a business decision that says, let's get annual fees as low as possible, and then just assess that one-time deconversion fee when it takes place.
And that's, I just want to make sure that everybody understands. If you have a 401k plan and you say like, I want to sunset this plan, the TPA will charge you somewhere around that just to to do something like this. So just like keep that in mind, how this works. But I would argue the problem that or the issue that we're facing today is it's no longer just an option not to provide or not to provide a retirement plan for our employees. If you have more than 5 employees, it's becoming like it's a must if you are operating in Illinois. And actually, I would say like I think there is like another 40 states that's coming online on that in the same lineup onto this where you have a state mandate. The state mandate is one thing. Leaving the funds, I mean, the fun part is this is an extra benefit that you can give to your employees. That literally is not costing you anything other than match that you're actually receiving. So it's something that I think most people don't think about when it comes, because it's money that they put it in their retirement. But as everybody knows, everybody need to save for retirement, especially how things are going. So, so that's my. I just see somebody that have anybody have any questions?
Yeah,
Other questions?
It's actually a comment, Hussam. I believe that most small business owners don't even know that it's an obligation to have the retirement plan if they have 5 or more employees. I personally myself had a business not a long time ago, and I had 16 employees. I never heard that I have to get them a retirement option.
I then thank you for the comment, Rami. I will send it to everybody that actually signed them. The revenue rule, and they can check it out themselves. It's under this Illinois Secure Choice plans. So this is something that that's built into the into
No,
the
I know it is there. I trust that, but I think the Illinois State is not communicating enough with small businesses,
Yeah,
informing them
I mean,
about
here
this.
is the bulletin. I mean, here is
No,
the
but not a
bulletin.
lot of people know about it. So there
You
is
know
a
that
problem with the communication between the state and the business owners.
I see a lot of employers that have they receive the notice, and a lot of people that either they have their accountant doing their payroll and they're not really paying attention to these notices, and it's the problem is you look at the penalty, it's spelled out. If you don't respond with 120 days from these notices, you're actually liable for $500. It's one of those things that's go through cracks and just nobody really pay attention to it. But it's something that I want to make sure that I highlight to everybody. The second thing is the tax credit. I mean, there is no reason not to get that credit for your employees. So that's what we want. I mean, we don't want people to just do it because of the penalty. We want them to do it so they can actually provide extra value for their employees and for themselves if they are not making that numbers yet. So that's another important discussion. But I keep saying this is like employee by employee, employer by employer conversation, and we would love to have that conversation at later dates. And we're open for one-on-one consultation for anyone who's interested to hear more about that.
Oh yeah, I want to add also a small thing. As a business consultant, I do consultation every day to businesses, and one of the most reasons why businesses fail is because of the lack of employee expertise or the high turnover among experienced employees. And I think offering such a benefit to employees will give all business owners competitive advantage and help them maintain their good qualified employees to stay in the company. And this is really significant, has a significant impact on their business success. So I am definitely going to be using that in my future consultations for business owners for sure, because it is going to contribute to their business success. They're not just simply giving benefits and more advantages to their employees, but they are also enhancing their business by securing and maintaining their good qualified employees. And because many other small businesses don't offer this for OK or retirement, so this is going to be great added value.
I have a quick question. Just wondering, will this webinar be sent to each of us, or is it available for us to come back and review?
We will yani once we'll go through and like make sure that we have it, we'll edit it, make sure that it's any lag time, and we'll send it to you, and we'll send you the material that we had, and we'll send you like option to like do one-on-one consultation. So we'll hopefully be able to follow up with you in regards to this, and if you have any questions, we're more than happy to be a resource.
Perfect. Thank you.
Awesome.
Any
I would
last
like to point out one thing, and I think we all owe Hussam a huge thank you, and I mean this sincerely, because getting this word out to everybody that this plan exists, this pooled employer plan, and helping that business owner who the biggest hurdle they had in the past was the time, right? Sometimes the cost, most often the time. And the PEP addresses both of those. And now it's like you don't have any excuses anymore. You should offer a 401k plan. We're trying to make it as easy as possible for you, and that will long-term help your business by attracting and retaining. So Hussam, thank you for getting the word out to all of your network, and please take Hussam up or me and let us know how we can further help you.
Thank you, guys, and have a wonderful day. Thank you.
Thank you so much.
Thank you.